Hello, today is November 20th, 2021. We always start with our disclaimers. Let's get that out of the way. This is my trading plan for Monday, November 22nd. Just remember, I can be completely wrong. All trade should be at your own risk. If you like the channel, I'd appreciate it if you click like and tell your friends to subscribe. We had a few calls. He said the ideal situation would be if we had a drop right from the open, but I had nothing requiring it. And if that didn't happen, it wouldn't be too hard to break the all-time high, which happened in futures. It hasn't happened in cash yet. These are the patterns we're looking for next week, and Monday should have the early high. This was also the early high, but I admit it's possible to count it either way. Consolidations are always like that. Now, Norm Winsky had some calls too. He had two times that were important to him. One was during the eclipse, which is right here at this high. It's a possible change in trend. And the other was Friday afternoon, which was right here for the change in trend. So those times did work. His research shows there's a 75% chance, not 100, but 75, that we have a 1.25% drop from this high. In the futures, that gives us a 75% chance of hitting 46.6450. And if it's right, I would guess we hit it pretty soon. And that's a target, as I understand it. It's not a stop and reverse. Well, during the day, MEJT said this rally was false, would retrace, said this drop was false, would retrace. We have this strong rally. MEJT says it won't stick, it's false, would retrace. Got a sell signal. We got the retracement, the sell signal played out, and all those things worked. Well, the weekends when we talk about the longer-term picture, and of course my longer-term calls can't be as accurate as my shorter-term ones, but here's what I have. The general idea is that we have a sharp blue A down, A, B, we're making C, which could be complete, but I don't think it is. And after blue B completes, we have a sharp wave C down. Well, this isn't a sharp wave C down, so sharp wave blue C down, so I don't think this is over yet. But I would like to see more of a correction than we've had so far. Let's take a look at this last leg up. The idea was we had the first leg, we had a correction, and I like an ABC. Now it's possible this could have been all of it, but it's now easy to count this leg up as being complete. Doesn't mean it's the only count. But if it is complete, the ideal situation would be a wave C somewhat equal to wave A, and that would take us under this low, which is just under 46.31 cash. Well, if that's blue A, you can count the A, count the B, count the C, and all the fibs work. If we do get the low right under this low at around 46.31, it would create a nice Fibonacci grid with hits right here, right here, right here. Now, just because it makes a perfect picture like that doesn't mean it has to play out. But if we do drop, it's one of the reasonable targets. And I'm calling this likely diamond on stilts pattern. You can have the left stilt split. Here's a diamond. And if we get a sharp stilt down, which is plausible but not required, you would find support right under the origin of the left still. So if we do have a sharp move down, which is what Norm Winsky's stuff aims for, we wouldn't have to stop in the 46.60s. It'd make more sense to me if we stopped around 46.30 cash. Now, this is not the kind of action you really want to see when you hit new highs. We hit a new high in futures, undercut all these previous highs immediately. That's a rejection of the high. Now, the rejection could be rejected too, but you have to clear this high pretty fast, which is possible, but I think unlikely at this point. Let's go over some of the reasons. Now, Monday's pattern has the early high. We should say gap down. Okay, glad I'm caught that. We could gap down. Usually it's a rally day with a final hour high, but failure is a straight line drop. Now, we have a new all-time high in futures, and there's a VIX Bollinger Band reversal signal. So it gives a bull some hope we'll have the normal bullish pattern. However, the new high was immediately rejected. And if we did drop immediately, it would vitiate the VIX reversal signal. There were multiple signs of weakness as we hit a new high. The percent of stocks with favorable patterns, the bullish percent of SPX, took a big drop. New highs minus new lows hit a big drop. The percent of stocks over their 200-day moving average, all these things weakened significantly. So instead of showing increased strength with the break to new high in futures, we saw a weakening in breadth and new lows gathering strength over the new highs. It's not the kind of thing you want to see if you're a bull. Norm Winsky's information suggests a 75% chance we drop into the 46.60s in futures. And there's a Fibonacci grid pattern which completes around 46.30 cash. We're coming into what historically is the strongest time of the year. Were we to have a straight line drop into the mid 4600s, it should set the stage for the typical year-end rally with new highs in store. This could well last into the new year, although January right now is looking less than bright to me. So if this isn't invalidated quickly, a number of factors give a high percentage chance, but not a certainty. We have a straight line drop. It could take us into the 4600s or even into the 4630s. And if that were to happen, it would complete the wave count the way I'd like it to complete, and then the rally could continue. But it's a high likelihood, it isn't a certainty, but I think that's the most likely thing to happen at this time, and that's today's call.